Welcome back, traders and investors. I'm Brianna Valesky here with Joel Elconin. We've got Andrew Nyquist on the line. He's the founder of See It Market. Andy, thanks for coming on the show today. How are you doing today?
I'm doing great. Thanks for having me on.
So to kick things off, give us a little bit of your background. You ended a stint in the financial services industry to focus on See It Market. Is that correct?
That's right. Yeah, I was in the financial services industry for 10 years as a vice president for a large money bank in corporates. And I had always been a trader. And when I say always, I should date that back to the late 90s. And so my time learning how to trade was, with a reduced budget, which is good for making plenty of mistakes, as all traders need to make in that process we go through in maturation. And so I really learned early on through trading some names that I probably shouldn't have, doing a little bit more speculative stuff. And then, I really, my passion kind of went from there. I was really got into technical analysis, trading setups, and followed a site, Minionville, that I'm sure Benzinga's familiar with.
Yep.
And Todd Harrison and that crew, and actually got a chance to start writing there. And so that's where I kind of cut my teeth and was able to do some writing for Minionville, and then expanded from there with Benzinga, with Business Insider, Yahoo. And what I realized through the process was that there are a lot of great traders out there, far better than myself, and names of folks that that really hadn't been heard. And so I wanted to put something together that was, a bit of a blog forum type for research that allowed for some of those names to come out. And so all the while myself, I continued with my head down, and I see it market started to grow a little bit, made the decision to take the leap. And, I'm a full-time prop trader as well, and that's how I subsidize a majority of my income. And, so it's kind of a dual thing, managing trading and See It Market, but really quite a bit of passion into it, and it's a good thing for me. I really love it.
Andy, you say you're a macro guy, so I would love to get your overall macro perspective right now, and then I have to ask you about oil.
Sure. Yeah, well, oil definitely factors into the macro perspective, and I was on Fox Talk Radio last week, and a couple weeks back, talking exactly about this. The volatility isn't a surprise, and I guess a lot of people shouldn't be too surprised. We definitely got a bit ahead of ourselves. Sentiment, investors were getting a bit frothy. It seemed like there was nothing to do but go higher, and it became a little bit crowded. But at the same time, oil began to crash, and Europe began to see cracks, and the euro was falling. And I think that should have been the first sign, especially when oil broke $75. That should have been the first sign that things aren't quite right. And when any major asset class begins to collapse, it's almost impossible for global equities to keep themselves in shape per se. And so we saw the 10% move lower in October, 5% in December, 4 or 5 again in January, and we've pretty much muddled in a bit of a volatile range here for the last 2 months. And I think it's just a time to be safe. I think it's a time to really look for the markets to begin to show some relative strength. And it may take a while to break out of that range. I'm actually looking for the potential for a little bit more downside before we see upside. But I would frame all of that as saying that much of this is normal in terms of, if we see another 10% dip, that's not abnormal in the scheme of things.
Okay, Andy, let's get into the nitty-gritty of things here. And right away, I love the name of your site, See It Market. We talk about it with a lot of guests. If you're looking at a chart and you can't figure out the pattern, chances are they're not a pattern. So let's just talk about your technical analysis techniques. Are you a candlestick guy or bar chart, or what kind of chart you like to use?
Yeah, I'm a candlestick guy. And I definitely look for a few different types of setups, especially short term. Short term, I like to look for RSI divergences. I think that's critical. And then in terms of candles, I also like to use DeMark setups.
Mm-hmm.
I
Time to
don't
mark.
tend
Okay.
to use many of the other signals with DeMark, and I don't claim to be an expert by any means. A lot of it is feel for a trader over the long term of trading. But with the DeMark setups, that's 9 bars that close lower than the close 4 closes ago, and you can use it on a 1 minute, 5 minute, 15, 30 hourly. You can use it on daily, weekly, monthly, and so that's something that I look for as well. And with such volatile markets here of late, I tend to like to be a little bit longer term swing trader, and it's forced me to actually do some day trades and short term things just to keep active. And you really need a bit more focus.
Yeah, Dennis and I talk. I mean, we have different accounts. Obviously, long-term portfolio accounts, swing trading accounts, and day trading accounts. Do you try and separate those as well, just to kind of just different time frames, different perspectives on the markets?
I don't, but I will say that I think it was in mid-December, I made a decision that until I saw some things start to brighten up, that I was only going to trade with a certain amount of equity, a certain percentage, and I put that at 40%. And so that's what I'm using right now, and I think that was just kind of a guide for me to add some security, especially while I'm managing the site. And there's a number of things going on. The last thing for me, and many traders know this, is you don't want to let a trade get away from you. And you definitely, we're in that environment where that can happen, where mental stops don't always work so well. And so for me, that was something that I set to ensure that I put some controls in place for myself. And I think it was smart. I think I've done this long enough to know that when we started to see certain action take place in the markets and how it's developed over the last few months, that it's right now still a place where traders need to use caution. And for me, it's just a more of a short term environment, and I would like to be doing some longer swings, but and I'm fine. There's a couple of things that you can nibble on to build up some positions and just still set some stops. But it's an environment that right now for me just isn't very healthy. And you're seeing some good action out of utilities, good action out of long bonds. It's a defensive type of posture, and we still don't have full resolution with how strong the dollar is. It looks like it's getting exhausted, but is that run over? Is the euro starting to firm? Is that QE going to have some further impact economically? So there's still a lot of things that need to kind of get sorted out with the story. And lastly, and I don't mean to touch on so many subjects, but the retail and the consumer has really been something that has come back into focus after, kind of the switch into the global view, which took the U.S. economy kind of out of the equation. It became much more global, but I think it's coming back into perspective here, especially with a stronger dollar. And the retail for December was weak. I think visually Apple's earnings helped, at least psychologically, a bit, but perhaps we'll get a little more clarification tomorrow with fourth quarter GDP.
Are you active in the equities only when you take positions, or do you like to dabble in the options markets?
Equities. I've been that way. I believe Sheldon McIntyre is that way as well, and we've joked a bit about it. There's everyone has their different style for what they're comfortable with. For me, I've just traded equities. I've leaned a little bit harder on index funds here of late, and I find that to be my comfort zone.
Are you a news trader at all? Like you come in, you see, oh, Alibaba's down $8. I'm gonna take a look at this today, or do you have like a stable a stable of stocks that you look for your setups, and that's what you play?
I think that's a great point. I like to look across all the different sectors and take a peek at what's working just to get a good gauge of the health of the market. And that usually even comes after I look, globally at the different asset classes and see what's happening. Just it always pays to understand whether you're in a healthy, momentous market or if you're in more of a churny, sideways, unhealthy market. And so that's kind of what I do first. And from those sectors, I get a good idea of what's working and not. It's funny you mentioned Alibaba because what's interesting about that and how I can tie into their earnings. I was eyeing Alibaba into their earnings, and they're right around that critical $100 level. And it's really interesting how stocks have a way of being magnetized to key levels as they get into some sort of big news, earnings, or some inflection point. And that's a reason for me. I don't dabble in trading earnings reports. Is just because of that. There is just a huge amount of volatility that comes in. But as you saw with Alibaba, their report came in. They're down $8 and they're down to $90. And right now, I would view that as technically broken short term, and would definitely want to see some sort of firming up from Alibaba before I became interested again, or see some sort of a setup there that brought me in.
What else is on your radar for today?
Well, in terms of reports and stuff, I know that tomorrow we have the fourth quarter GDP, so it's for me it's kind of a quiet day. In fact, yesterday with the Fed day, I tweeted a picture out. I was teaching reading to kindergartners and first graders for a couple hours during the day. It sounds like something you would never hear that a trader would do, but for me, there's certain days that just don't pay. You don't have to overtrade. You don't have to be a part of the noise. And for me, on Fed days, it's good to just get away because again, there's a lot of whipsaw that happens. I think an interesting story that's kind of continued on here is weakness in the banks, and looking at relative strength and how the banks are holding up, and they're just not playing very well right now. And it's kind of that phrase, so go the piggies, so go the pokes. So I think that's another telltale sign that things are starting to slow. And Microsoft's earnings brought more concerns to the currency front. And so tying that into what am I looking at today, it's more of the same just from a macro perspective. Is the dollar going to continue its run? Is it going to continue to remain firm here for the near term? And, for me, my personal take on the dollar is that it's getting to a point of exhaustion. We've had a number of different research posts here showing that it's running into its long-term downtrend. And also, I think Chris Kimball had mentioned that it's at its third highest point percentage-wise above its 200-day moving average in the last 30 years. So it's definitely a sign of strength, and it is a concern over the medium term next 2 years. Obviously, if we break above that, that's going to have some ramifications, I believe, to the economy. But over the short term, I'm watching to see if the dollar can slow its run.
Is there any particular banks you're going to be picking on today? Any resistance levels that if they get a pop, you might identify a lower risk short?
That's a good point. I am always watching the various indices to see the levels that they're at and whether or not that intrigues me. And that is something that, again, that I do trade, and fortunate to have enough capital to be able to trade equities and to be able to make a difference when I do decide to make moves. And so I think that the S&P 500 for me, if we see some sort of a move back down near the January lows, that would be a caution sign for me. And if we broke through the January lows, it would probably initiate a short on that. So I think the December lows are probably even more important, and there's quite a bit of air below the December lows, a vacuum there of sorts that could make it hard for the S&P 500 to find a lot of support until it hits down near 1900 or perhaps as low as 1850.
Ooh, wow. Boy, that's a long ways away from here. I don't hear anybody talking about those kind of levels. Well, before I let you go, I just, kind of talking, just getting an overall picture here. A lot of V bottoms in the market. The V bottom in October rallied up, kind of like the V bottom rally here in mid December. Came back down here in January and bolted out again, each time making lower highs here. Is this the time where we just don't just go right back up into the mid 2020s? What are you looking for?
Yeah, honestly, over the near term, I'm looking for more of the same. I think, again, it's a market where traders and active investors are looking for clarification, and everyone wants to be a part of the market, including myself. And I'm going to make some trades, and I'm going to try to take what the market's going to give me, but nothing more, and until the market decides what it's going to do. And for me, the S&P 500 is the major index that I watch, and it's going to have to perk up, and I would say I'm going to need to see it move up over 2070 to really give me an idea that it's potentially ready to break out. We saw it start up at 2064, and until we can really eclipse that level on a closing basis, I think that we're still in this choppy, range-bound type market, and that is good for traders, but you just have to limit position sizes, be a little bit shorter term, and as many folks who are stock pickers would tell you as well, you got to look for names that appeal to you, or sectors that appeal to you based off of their relative strength. You always want to be in something that is exerting relative strength, and on the flip side, shorting stuff that isn't, and that would be things like the energy names. I had a recent research post that I read by Aaron Jackson that just showed some of the continuation patterns and breakdowns in the energy space, and so that's kind of what I'm looking at, just playing it somewhat safe here over the coming days.
Okay, we've been on the line with Andrew Nyquist. He's the founder of See It Market, talking about his trading strategies in the market. Thank you, Andrew, and have a great trading day. We'd like to talk to you again soon.
Yeah, thanks for having me on. I appreciate it, Joel and Brianna.
Thanks a lot, Andrew.